Hey guys, what's up? Welcome to another episode with me, Shashank Godappa. And in today's episode, we are going to look at what is PPFAS buying? Have they performed well? Are they still continuing to do well? That is a question a lot of people are asking me. That Shashank, please analyze them and please understand what's going on. So today we're quickly going to understand this company and understand the mutual fund, understand everything about it as well. And we will also check the recent Feb buys. Okay. Now, obviously, we know that the market is not doing great. It is absolutely in a bad position right now. And that is why a lot of people want to know what is PPFAS doing, because they usually try investing in this long term, value driven, deep value approach, contra approach kind of a system, right? And they're usually risk off rather than risk on, like other mutual funds who just want to play complete momentum. These guys play deep value. And if I share my screen and quickly show you how they have been doing in the last 1 year, you will see that PPFAS right now has gone up 6.75% in the last 1 year. And at the same time, if I look at Nifty 50 has gone up 4.76% in the last 1 year. So, yes, even in this tough time, there has been outperformance. Even though they have companies in Nifty 50 500, there has been very good outperformance from that side, right? So then I said, okay, cool, outperformance is there. So we don't have to like really go deep into the performance as we know it is good. Let's directly dive into the entire dashboard. So what I've done is I went to the PPFAS website, FlexiCap website, downloaded the February fact sheet, gave it to AI, gave it a custom prompt, and a nice dashboard has come into this, right? So let's quickly understand that AUM is at 1,34,000 crores as of Feb 27, 2026. Their NAV has definitely gone up. Again, this is as of Feb 27, as per the fact sheet data. Obviously, now we are way above that. The expense ratio for regular is 1.28 and direct is 0.63, literally double. So if you are invested in regular PPFAS, please understand that you're losing 0.6% every year compounded extra for no reason, right? Beta is amazing. Beta is at 0.6. That means if the market falls, they don't fall much. Sharp ratio is very good, which is risk adjusted returns is also looking very nice at 1.6. Anything above 1 is good, higher the better. Now, the fun part is they have a lot of cash. Even now, they are holding 20% cash. And this is a problem that everyone is talking about, saying DIIs have the money, FIIs are selling. Why is DII not buying? Why is DII not buying? But they have a lot of cash. Now, if I show you how their portfolio is looking like in the month of Feb, this is how it looks like. Majority of their portfolio is in banks and 22% is in cash. So basically, 42% has gone here. After that, it is 15.4% IT. Now, this is by design. If you look at any mutual fund, they will pretty much have banks and IT as their main source. A lot of people don't understand this in the market because they're still new in the market. They look at some flexi cap fund and they'll be like, I think I remember when the Geo BlackRock flexi cap fund came, people are like, oh my God, with all that AI, they went and bought Reliance and SBI and TCS. We could have also done that. But obviously, people are naive. They don't understand this, that these funds also have to correlate themselves somewhere to the benchmark. If I don't have Reliance, I don't have SBI, I don't have HDFC, and I don't have TCS, then I'm far away from the actual Nifty 50, right? So what these funds usually do is they correlate themselves very closely to Nifty 50, and then the remaining mid and small is where they try to generate alpha. So it's like even if I'm almost 60% Nifty 50, with the remaining 40%, I can play mid and small and try to generate 2%, 3% alpha, because these funds don't want 20, 30%. They're not PMS to play that aggressive, right? So very interesting here. And let us start looking at their recent picks as well. This is the industry allocation that you can see right now. So pretty much Nifty 50 only. Coming to PPFA's holdings. Now, as you know, HDFC is very big in their portfolio. 7.73%. Weight has changed a little bit. Power Grid Corporation, a very big dividend player, is there. Coal India, a very big dividend player, is there. ICICI, ITC, and all of that, right? Now, let us look at what they've increased. They have increased Maruti Suzuki. Maruti Suzuki has been increased in their portfolio, which is again a good sign, not bad at all. So, this has been increased in their portfolio a little bit, auto. I think after that, we have also seen IT shopping has happened. Now, as you know, IT is currently the best deep value contra pick. I'm not going to say that IT is going to recover today or tomorrow, but definitely the valuations are supporting today because TCS is sitting at a very low valuation. HCL, Infosys, all of them are at absolute beaten down valuations, right? And these are cash kings. So they have gone IT shopping and they have increased their position in IT very, very well. They've gone up quite a bit. So that is some positive that at least these guys are buying IT. They've also increased their system in CMS Infosystems. Now, CMS, they have been buying a lot, honestly, right? CMS is a mid to small cap company. If you see, it is currently sitting at small cap only, 4,779. They're one of the largest cash management companies in the world, in India, but they have fallen down 34%. And as you can see here, that PPFAS has been constantly buying CMS Info, because the P ratio has also gone down to 14. But they are having revenue growth as well. They are having profit growth. They are having net worth growth, and they're also aggressively acquiring different companies, right? But the profit and loss is looking good, but the stock price is going down a lot. So they're constantly adding this from couple of quarters from what we've been looking at, but it's a very small position in their portfolio as of now. They've also added gas. Indraprastha and Mahanagar gas is something they've added, but extremely tiny positions is what they have currently added, right? Looking at their overseas positions, they have Alphabet, Meta, Amazon, Microsoft. And this is something that they've added recently. And this is something I think all of you guys should pay attention if you are watching this video. They have added REITs. Okay. Now, I know most of us don't know what REITs are. Very few people know what REITs are, but they don't understand how it works. REITs are instruments that actually give a dividend yield of approximately 5.6%. As of now, Embassy, which is a Blackstone and Embassy group. Then we have Brookfield, which is the largest developer in the world. Then there is Embassy, there's Blackstone and Satwa, which is the third REIT that is also there. So there are five different REITs in total. Embassy, Brookfield, Mindspace. Then there's a new one that recently came out called Knowledge Reality REIT. This one, Knowledge Reality, is basically Satwa Group and Blackstone. Embassy is Blackstone and Embassy. Then Brookfield is just Brookfield. Then we have Nexus REIT, which is again Blackstone. But Nexus basically invests mainly in malls. Embassy and all of these guys are commercial real estate. And then you have Mindspace REIT, which is owned by Raheja Group, right? So all of them now have done very well. Most of the dividends are actually tax-free, by the way. But this is something that they're adding a lot for 2-3 reasons. One is it gives beautiful stability to the portfolio. They are all expanding. For example, Brookfield is Embassy is getting Hilton Hotel expansion. Brookfield recently bought Eco World, 0.7 million square feet. They already have, I think, they have 1.8. They're adding 0.7. Huge amount of capex is coming in. But yes, REITs have their own problems. Please don't get overexcited looking at the dividend yield. When I did a deep dive, I realized there are more problems also coming there. But they have bought a lot of REITs, right? And this gives huge amount of dividend yield. Almost tax free. Most of it is tax free. So huge amount of dividend yield that comes into their portfolio. So if you see PPFAS, they actually have a lot of positions that are dividend yielding positions. That is something that I've understood here. That they have a lot of dividend yielding positions. They have sold MCX. They've added all of this is what I showed you. They've added the REITs. REITs is been their biggest buying right now. And if you go see the shareholding pattern as well, they have been buying a lot of REITs. But I would not want to talk too much about REITs in this episode. Maybe I will do a deep dive into REITs slightly later, right? But again, please understand that the market is not doing well. And this is the best time to keep accumulating units of any mutual fund. It's not just this mutual fund. If you're buying index fund, it is the best time to stay invested. Continue your SIPs, double down if required. But do not exit in this market, because it's either, if you're exiting right now, it's already too late. So I would actually double down as much as possible, right? But these are the buying list for this month. Very interesting. Hopefully they deploy their cash soon. But again, time will tell. Awesome. I hope you guys enjoyed this video. I hope you guys liked this video. And if you did, please click on that like button and also click on the subscribe button. And I will see you guys soon. Take care. See you guys. Bye-bye.